So, what if you could get into a room with the world's top financial minds right before a massive market crash? What would they tell you to do? Well, today, that's exactly what we're going to do. We're distilling insights from a hypothetical summit of experts into a clear, actionable playbook for navigating the chaos of crypto volatility. And that quote, it just nails it. This isn't about scaring anyone or trying to predict the future. Nope. This is all about smart preparation. It's about understanding the game, the psychology behind the cycles, and having a solid plan in place before the panic starts. Because let's be real, when emotions are running wild, a good strategy is the only thing that's going to save you. To build this playbook, our source material basically imagined a war room with an absolute dream team of investors. You've got legends like Warren Buffett, macro gurus like Ray Dalio, and some of the sharpest minds in crypto. We're going to walk through their collective wisdom, and we've broken it all down into 5 clear phases, showing you how they'd handle a crash from the first rumble of thunder to the clear skies after the storm. All right, first up, phase 1, preparing before the crash. This is everything. This is the foundation. What you do in the quiet moments before the storm hits, well, that's what decides if you come out of this stronger than ever or if you get washed away. Okay, so what's so cool here is you've got this incredible clash of philosophies. On one side, you have Michael Saylor's super aggressive take. Crashes are for accumulating power, and all that volatility, it's a gift. Then on the other side, you've got Warren Buffett's classic, timeless advice. Hold cash, stay away from junk, and for heaven's sakes, know what you own. You've got 2 totally different worldviews looking at the exact same event. And yet, and this is the fascinating part, despite those huge differences, they all land on a surprisingly similar battle plan. It's a unified strategy. Why? Because they all get one fundamental truth. A crash absolutely punishes anyone who is fragile. So they build a fortress. They stack up cash, they cut the speculative stuff, they deleverage, and maybe most important of all, they prepare their own minds. They know exactly why they own what they own. And now for phase 2. You're prepared, the alarms are blaring, and the market is in an absolute freefall. This is where the rubber meets the road. Buying during the panic. It's that moment when every single instinct in your body is screaming at you to sell everything and run. So how do you do it? The key is to take your emotions and lock them in a box. This is where a systematic approach, like Balaji Srinivasan's, comes in. You're not trying to be a hero and catch the perfect bottom. That's a fool's game. Instead, you preset automated buy orders at huge discounts. You put your capital to work in chunks. You know why? An algorithm doesn't panic. But you will. And this quote, this is a piece of wisdom that can save you so much pain. When things get crazy, the system itself starts to break. Exchanges crash, apps freeze, withdrawals get halted. Your genius plan means nothing if you can't actually execute it. Friction is having your money stuck in a digital traffic jam while the sale of a lifetime is happening. The lesson? Have your cash ready to go on different platforms ready to deploy. Think of this slide as the 7 deadly sins of a market crash. Every single one of these can turn a painful dip into a total wipeout. Hesitating, using leverage, getting emotional, these are the classic traps. The message from the pros is crystal clear. Stick to your system and stay disciplined. No exceptions. Okay, you did it. You survived the chaos. Now what? Welcome to phase 3, navigating the recovery. The big question at this point is, how do you know if you've hit the real bottom and you're not just looking at a dead cat bounce? Well, according to a macro investor like Raoul Pal, a bottom isn't a single price. It's a process. It's a story of emotional exhaustion. It starts with despair, when even the worst news imaginable can't push the price any lower. The market is just tired. Then comes confusion, where prices just chop sideways. And finally, you get disbelief, where the market starts slowly grinding up, making higher lows that nobody really trusts yet. But it's not just about feelings, right? You need cold, hard data. Think of yourself as a detective looking for clues. And this is your checklist. You're looking for signs of life under the hood. Developers are building again. Transactions are picking up. You're watching those big global money flows. You're seeing the asset just shrug off bad news. When you see these things lining up, a new, better story is starting to be told. So, as you start to rebuild, what does your portfolio actually look like? Ray Dalio would suggest something balanced, something strong, a solid core, 60%, and the big names like Bitcoin and Ethereum,
20% pointed at the future, the next wave of innovation, and a really crucial 20% kept in stable assets, ready for whatever comes next.
We've talked about preparing, we've talked about buying low, but now we've reached what is, for most people, the hardest part of all. Let's get into phase 4, selling at the summit. How in the world do you know when the party's over? The signs of a top are just the mirror image of the bottom. Instead of despair, you have total euphoria. People start saying crazy things like risk-free wealth. Analysis goes out the window and pure gambling, like meme coin mania, takes over. And you see the network just get flooded with people who are there for the hype, not for the technology. So how do you fight that feeling of greed when prices are going vertical? You guessed it, with a system. Raoul Pal calls it laddered harvesting. You're not trying to be a genius and sell everything at the absolute peak. Instead, you're just taking some chips off the table. You sell a small, pre-planned amount every time your investment hits a new milestone. The benefit here is huge because it forces you to be disciplined and actually take some of those amazing profits you've made. And leave it to Warren Buffett to just cut through all the noise with one simple, perfect rule. When people stop talking about value and fundamentals and all you hear is hype and crazy price targets, you're not in a boardroom anymore. You're at the circus. And that's your cue to head for the exit. So we've been through the entire cycle, the preparation, the panic, the recovery, and the peak. But what's the one thing, the one principle that ties this whole playbook together? Well, that brings us to our final phase, the winner's mindset. Look, here's the absolute bottom line. Winning in this game isn't about being a genius who can predict the future or some daredevil making huge bets. It's about doing the boring, hard work of preparation ahead of time and then having the steel-clad discipline to follow your plan while everyone else is losing their minds. And this quote from Ray Dalio just says it all. A market crash isn't some random punishment from the universe. It's a fundamental process. It's a massive transfer of wealth and opportunity, moving from the hands of the impulsive and the emotional to the hands of the disciplined. So at the end of the day, this whole playbook is really a challenge. We know for a fact another cycle is coming. It's not an if, it's a when. The only thing we don't know is how you're going to respond. So the final question isn't for us, it's for you. When that time comes, will you be impulsive or will you be disciplined?